The next big mistake that we make as traders is assuming that because we see this type of equity curve, or because we see that the system is 75% accurate, what we tend to assume is that we'll always make money. And I've talked about this before as well, that when we see something that's, say, 60%, what that equals in our mind is most of the time. So our expectation is that we'll win most of the time, and by my estimation, when things are 75% or 80% or even higher, what that means to us is all of the time. All of the time. So we go into the trading system thinking I should win all of the time. Well, hopefully what you saw at the live event with that little marble game that we played was that even in a system that is 60%, we had significant streaks, didn't we? We had a bunch of winners in a row. Oftentimes we'd have some losers in a row, but that run happened to be a bunch of winners. We had one streak of 5. I think we had a couple of streaks of 3 wins in a row. When, really it should be fairly random, right? You wouldn't expect to have those kinds of streaks. Well, those kinds of streaks can happen also on the losing side. So let's take a look at this whole idea of expectancy. And this is a statistical term. And I am not a statistics expert. I don't pretend to play one on TV. I feel I have a fairly good grasp of how statistics can apply to trading. Because you have to remember something. We are dealing with hindsight. Okay, anytime you see somebody, they've got their trading system, and here's the graph, and you see the equity curve going up like this. This equity curve is based on knowing what the past is already. Okay, this doesn't say one thing about what the very next trade might be. We know what the likelihood of it is. In other words, what are the odds? What are the chances that the next trade will be profitable? And again, going back to these numbers, when we hear something is 80% profitable, meaning 80% of the trades are winners, we automatically equate that to, well, the next trade has an 80% chance of winning. And that's not how statistics work. Just because 80% of your trades are winners, that does not equal the next trade is 80% likely to be a winner. Okay, that's not how that works. All that this means is that 80% of your trades are winners. That next trade can be anything. So when we talk about expectancy, what this equation looks at, and this is a spreadsheet that was on your USB drive. It's also going to be up on the website by the time you're viewing this. So if you don't have the spreadsheet for some reason, whether you lost your USB drive or something, you stepped on it and it's not working, you can go onto the website to get this. But what this expectancy equation will do is it will look at the average.